Hello guys, it is Alex from Investary, and again this is the second part of the coverage of Tesla Motors, and this part I really want to talk about the analysis of the company. And let me start my watch so I don't lose track of time. But I really want to talk about why we chose this company and really get into the nitty-gritty of the company. So the first thing is the short interest of this company. It amazes me to see that the short interest of this company right now is at, give or take, percentage wise, it is a very high amount of short. There's sources that are saying it's 37%, 53%. So I don't know exactly the percent, as again that varies depending on the day and the market, but it is something that really surprised me to look at a company and see such short interest. Now, to me, I believe it's understandable to see a company like Tesla that have short interest, and the primary reason is because they want to see the CEO fail. This is Elon Musk, but I feel that this is another reason why this company stood out to us, is because having a visionary is something that we are looking for in an investment, and we'll get into more detail on that later, but it is something that is important for investors to look at. And when you have someone who knows how to run a company, who started the company and personally put down a lot of money, it gives you a lot more trust. And you can find more information about Elon Musk by just searching him up. But I think the reason why there's a lot of short interest in this company is because people want to see Tesla fail. And this goes from a ton of sources. A lot of the oil companies wants to see Tesla fail. They don't want oil to, they still want that demand of oil. And that's very understandable because that is a huge part of the market. They do not want to see electric vehicles take over the transportation industry. And there's a lot of car companies as well who does not want to see Tesla succeed because it's another competition that they have to worry about. And there's Top Gear who made a piece saying how bad Tesla was, that these media companies out there are essentially trashing the company. And some do have a merit behind it, but others I feel that do not. And Top Gear it can really hurt Tesla's reputation when you have these media companies that are going against you. And this person right here is Tesla's former CEO. They kicked him out when the times were very, very tough. Obviously, he does not want to see Tesla succeed. He does have a grudge on the company, especially Elon, as he took over his position. But now I really want to talk about their recent operation, how their operations are doing, and essentially where we can see potential growth. From this sheet right here, we can see that the automobile sales are doing much better than they were just a year ago. That the numbers of their sales is incredible. The growth is definitely growing from the balance sheet of 2011 to the end of 2012, and there's the automobiles was a huge part, but obviously with the revenue there's a lot of cost that had to go up. And from the positive side of the sales, we can also see that this led to a huge cost. That is why this quarter they did not report better than expected earnings report. They have a lot of cost in their hand, but the research and development is relatively stable over the time period. Most of that is just reoccurring year after year. But we can see from here what is going on with the company. From the operations, we do see tremendous revenue, but at the same time, cost has been really big. And the balance sheet of the company, as we can see, they have assets they have a lot of assets, but at the same time a lot of liabilities. And this is just a breakdown of seeing how much cash they have. Obviously, the cash has declined since 2012. We believe that the cash part is not where we're worried about as much as how they're going to go forward and utilize the current investment, and especially because you can see that the inventory has went up. So this is probably a transfer of assets right there, and they've invested a ton of money in property and equipment, things such as that, which is very necessary in order to get that production of 400 vehicles per week that they are aiming for. Liability wise, obviously their debt has increased, their long-term debt has increased because they need more money to get these assets. That's very important. But overall, I do think that the whole asset part, their balance sheet is transferring their cash into physical products that they need to make the Model S and later the Model X. So they're converting that cash into the parts that are needed for their products. And obviously their balance sheet from this perspective a little bit more clear is we see the cash being $201 million. The debt is obviously overriding that, and that's why you can see that the debt to equity ratio is really high. But the most important thing you want to look at is this current ratio. This is always something that's important. When you have a current ratio that's relatively decent, that means the company is still soluble, and over 1 is always a good indicator. The book value wise, it's only $1 per share, which to me makes a lot of sense of why. This is obviously, if you haven't figured this out, this is much of a growth stock than any other. And the valuation method measures that we see, $4 billion in market cap. The really big thing that I am looking at is this forward price to earnings ratio for the end of 2014 is at 25. So this is a bit on the high side, but I think this number is reasonable at where the company is trading right now. The price to sales is around 10, which is, it is high for a standard company, but you gotta remember that this is a growth perspective. So this number, obviously, I would like that lower, but this is a good indicator of, the price to their revenue. The price to book, obviously, we won't even get into that because those measures it's not a value company, as you can probably see by now. So the bull and bear perspectives, we want to really talk about that because there's obviously a lot of pro sides and a lot of cons. So we see the management and executive team is very strong, and I think that it's very hard for even the bears to admit that they will have to admit that they are under a very good management team. And there's a high barrier of entry. That's always good on the competition side. And we've seen continuous growth of the company since they went public, and that's been on all their balance sheets over the last, as the quarters has progressed. We've seen the demand of the product is definitely there. Obviously right now they're more supply constrained than demand. And Tesla is one of the leading products in the electrical vehicle industry, which is big, and they're looking at very promising expansion internationally, especially in Asian and European markets. But at the same time, on the con side, people think that this company is overvalued because of their balance sheet, and that's their opinion, and they think that the company is way too young right now and not matured yet to have a stable growth for the future. Also, their primary product right now is the Model S. They don't have a secondary product that is in production right now. And some cons do think that there is heavy competition because the traditional automobile companies are starting to develop into the electrical vehicle industry. And they also believe that the expansion that they're going to make is going to have a lot of costs that are unsustainable for the future, which that is another very valid point. So you can see the both sides of the pros and cons of this. But what our take on the future is we're looking at the production rate. The company is saying that the production rate is going to improve, especially because of the extra funding that they had. As you can see before on the operations sheet, the transfer of that money into manufacturing products, things such as that, that's going to ramp up their production rate. And this is also a huge contributor to why the last quarter disappointed, is at least from the company's point of view. The demand will speed up. I think the demand right now, because of the cancellations, more cancellations were made, primarily due to the fact that it takes a long time for the product to be delivered to the customer. The estimated time right now is 5 months. They're trying to lower this time period where you have between when you make a reservation to the time the vehicle is delivered. So that is what they're working on. And I think the expansion to Asia is going to be big, and in Europe. Especially Europe is because of the fact that the price of oil is just it's unthinkable over there. Obviously they do have public transportation, that's a factor, so that's on the other side, but we do feel that the expansion, especially with the more stores that they open, is going to be tremendous for the company. So is this a reliable investment? Definitely a growth stock. That is one main thing I want to point out. This is not a value stock that we're looking at, and they're making a continuous effort to make the company profitable, and we're going to obviously look into that. The balance sheet is changing, and the future of it is also changing depending on what the investor or investors are thinking. But from our target, this is from the source is Trifix, which you can basically forecast what you think of the company for years ahead. We see this company at $65 from a 5-year perspective of the company, and this is essentially looking at increase in the gross margin, increase in the revenue of the unit for the Model S, and we think they're going to take a little bit more substantial market share. But our group sentiment right now is that this is a great long-term growth for growth investors, and to look into this company there's a lot of upside that we believe, and we have a $75 price target initiated on this company 5 years from now, and we think that it's very, very conservative, and this is factoring all the risks that we have been talking about. But there are concerns to address. Again, how will the production work out, the expansion, how will the research and design help the company, hurt the company, the demand, as well as how the cancellations will work out in the future. And all of these questions are rather unknown. But obviously our thesis is that we believe that the company can do well for all the questions that we addressed here. And you can pause the video to look at more of the questions. But our closing statement is all sources are going to be posted in the description of the video. We did not provide a technical perspective of the company. This is a very long-term trend that we're holding on to, but we believe the potential outweighs the negatives. So as a disclosure, we do own Tesla. It is a 2-year commitment plan as long as the thesis still holds true. Do your own research before making an investment decision, of course, and visit a Tesla store to look at the product and get a sense of what the company is. So that is it, guys. I want to thank you guys for watching this presentation. And that is it. I'll see you guys later.